Okay, folks, welcome back. All right, this is a discussion on new markets and market making. Okay, so we're going to be talking about blockchain. And before we even get into this, let me preface it by saying I have never, ever traded any cryptocurrencies. I've only recently gave it a second look because my subscriber base is actually growing exponentially, and it has a lot to do with the crypto community. Now, again, while I have never personally traded crypto, I have tens of thousands of subscribers, both on YouTube and my other media, that swear by my concepts working very well in this asset class. So I've spent about 2 weeks or so from the time of this recording, and what I've seen has shown me that there's a lot of things that I teach by way of the other asset classes, and my forte really is Forex. So some of the things that I teach, I go in, I look for, and if there's any evidence to support those characteristics or traits behind price action, then I believe that smart money is actually working inside that asset. Now, admittedly, because it was such a new asset, if you want to call it that, they were too fast in the limelight, if you will. Too many people were talking about it, and I just felt that it was better for me to sit on the sidelines and just wait and see how much growth or interest it gets from the banks. There's a lot of things that have been said negatively and positively about crypto, and I have been accused of beating up crypto, and I have beat up individuals that were trying to buy it at 18,000. I just felt that it was foolish to do so, and in fact, you can actually look at the tweets I did on December 17th of 2017 were actually called a high in the market on Bitcoin. I give you the reasons why I felt it was not going to hit 20,000. And while initially I was looking for 2,000 to 2,500 point slide, that was the precursor that led to the ultimate crash. Now, traders are not referring to it as a crash because that word begins a whole paradigm shift. Okay, and I think it, by far and large, the cryptocurrency market carries the same stigma that penny stocks has, and it's really basically pump and dump. And because there's really nothing behind the cryptocurrency except for the perceived value or the perceived future uh, usefulness of it as a replacement for fiat currency, it really is still in the same boat. So my argument has always been that all we're doing is talking about another flavor of ice cream. There's nothing really new under the sun. And while it may seem maverick or rebellious to be in this type of thing and thinking it's going to beat the banks, my personal opinion is it was actually started by the banks. Um, the the bankers are absolutely shrewd, okay, and you're going to never, ever, ever beat them, okay, as long as the sun keeps coming up and the world keeps turning. People are going to be doing business through the medium of a bank, and you're never going to escape it. So I just want to build this idea going forward. I think that crypto has a place in the future. Where that is personally, I don't know. I haven't given it that much concern to study it. I've only recently, in the last couple of weeks, really give it my time to look at, and it's only because we're on a holiday break, and Forex to me is a lot, it's lackluster for me right now, and I don't actively trade it in the latter parts of December. So I've given a lot of focus to crypto. And one of the first things I wanted to go into and see if it had hallmarks to how banking algorithms and how price engines deliver price. If those hallmarks are there in Bitcoin, then in fact it is a manipulated market and it is not a new bastion for for mavericks that are escaping the banking industry or the the Fed, if you will. It's the same show. Okay, all it is it's wearing a different dress now. So what I'm going to cover here is just basically a interpretation of how I look at assets and how I study price action. And it's going to be basically an overview general for most of the general concepts. Now, it's not an exhaustive because there's so many things that I do and can be done in price action that I can't include it in one video. I mean, anyone that has looked at my material knows that I can go on and on and on and never really exhaust the topic. So just understand that what I'm going to cover here are just basically real simple things that leads to my appreciation or respect of an asset because it has all the hallmarks that a large bank or institutional perspective would see in price action. And I'm going to discuss how these hallmarks lend well to my understanding of how markets are made. So it'll be a general overview how market making is done and how that might apply to cryptocurrencies. All right, so we're going to talk about pricing in premiums for distribution. And this is commonly referred to as pump and dump. When we see these events in price action, and again, they're very synonymous with penny stocks. They ramp up aggressively. You see these stellar rallies, and then everyone piles in at the top, and then it collapses and crashes down. So I'm going to show you how I gave this insight before the fact on my Twitter feed. And I'll give you some explanations as to why I felt it was likely to occur, and you can use it as an example to study. But it's not random in nature. So when we see these big run-ups in price, it's not just indiscriminate amount of buyers coming in. Price is actually being delivered to a specific level. Price seeks this specific level for a purpose of offloading smart money entries that have long earlier entered way before the move started going up. Once the price level is reached, we're going to anticipate and many times see heavy distribution. When this occurs, most often reversals form. And then what happens is the market will generally run against those long holders that are wanting to hold for higher prices. All right, so we're looking at Bitcoin. This is the Coinbase Bitcoin versus dollar. And I've highlighted a few things here that I like to look at for price. And what these are just delineating specific times of the day. So during London, I'm looking at generally between 2 o'clock in the morning New York time to 5 a.m. New York time. And in New York kill zone, I'm referring to specifically the 7 a.m. New York time to 10 o'clock in the morning. If I start seeing hallmarks behind price respecting these times of day, and when we have equal highs like this, okay, I refer to that as a liquidity pool. And for the purpose of making it easy to understand, it's like a candy land. Okay, so the market will go up there and snatch the candy from those individuals that want to sell short, trusting that as resistance. But I highlighted this level up here, 16,450. And the reason why I did that, I'll go in detail as to what that level is towards the end of the video. But for now, I just want you to focus on the fact that price was heading towards that level. Okay, so that was the specific level I had in mind. So they were pumping it up from way back here, and before, and they started consolidating here. These equal lows are the equivalent of what I've highlighted here. Resting above these equal highs would be buy stops, and below these equal lows would be sell stops. So anyone that had been long here, they see these equal lows. At that moment, they're going to trail their stop loss right below these equal lows, and that's what this move is here during the London session. So I like to see those types of characteristics. Then we had a little bit of retracement, again, back into New York, and then we had a nice rally up, and price, again, equal low. It's hard to see in here, but these are equal lows. Price came down in New York, tagged those stops, knocking in again. Any long holders that had a trailed stop loss in the form of a sell stop, those would be tagged here, and then and only then the market is permitted to trade higher. As price is starting to reach for this 16,450, my thought process is, okay, they're going to distribute there. So there's probably going to be a reversal scenario, most likely occurring around that level. little bit later on, price trades up into that 16,450 level. 2 times, trades to it just a little bit. Then ultimately it breaks down. Price creates another run below equal lows and then rallies up. Now I teach this as a specific trading pattern. This is my optimal trade entry, sell. And I'm highlighting here, and these are all tweeted charts. They were all time and date stamped, as you can see up here. And again, we have equal lows relative to these two specific lows here. And that's what's being highlighted. So I believe that the price is going to be drawn down to that level of 15,100 or 15,100. And that's the initial objective. So I'm looking to see if price wants to reach down here. Now I studied this entire week with you all publicly. I didn't know for certain it was going to unfold as accurate as it did. So that's the only reason why I'm even referring to crypto in a YouTube video on my channel, because I have never really been a fan of crypto, but I'm giving it my attention now because I get asked a lot of questions about it. And I know there's a large number of my community that actually do trade these assets, and I hear nothing but good things about my concepts working in them. So my interest has been piqued to the point where let me just take a look at it, and these are some of the things I've seen in the last 2 weeks. Now, there's things that led to me understanding this level as a specific time of day when it would hit and that specific level. Those are teachings that I do in my mentorship, which is not free, it's not public. I do have a lot of free tutorials on my website at theinnercircletrader.com, and I have a forum there, and you're all welcome to come, and there's no charge to go into that, but I give a lot of detailed teachings. Some of them are older, but they are still relevant. These are concepts that I've been trading with for over 20 years. So there's a lot of gravity towards what I'm teaching the trading community because what I teach works. It's not based on any kind of indicator. It's not based on any kind of, willy-nilly gimmick. Okay, it's straight price action, and it's based on an institutional perspective that lends very, very well to a chartist. So if you like looking at charts, or if you haven't really grown in an appreciation about charting, my concepts kind of force you to do that. If you don't want to subscribe to that view, then my methods aren't going to be any help to you. So the main takeaway is try not to blend other disciplines with what I teach, because mine more or less is at opposition with everyone else. It's like a lion. It'll defend itself. Just turn it loose. It'll do what it needs to do. Investigate the things I tell you to look for. Don't believe what I say. Just look at it yourself, and you'll be convinced. Okay, so the price was most likely going to reach for this level here, and that's what I was looking for. And again, I tweeted this chart, let everyone know what I was looking for. And this is the optimal trade entry pattern here. Okay, so I had a retracement back to the 62% retracement level, and we would look for reasonable price objectives as delineated here. Okay, so I was looking for this one primarily because it's a symmetrical price swing, which is again taught in my optimal trade entry or OTE primer video on my YouTube channel, Inner Circle Trader. You pull that up. It's a nice little introductory lesson to how to set your fib up and how I would look for optimal trade entry shorts and longs. But this is the optimal trade entry sell, and this would be a symmetrical price swing. So I'm looking for this as a downside objective. This is the initial objective, then this is the next one. And then if we get a really nice slide, we're going to look for this objective down here at 14,400, and then even lower than that. But these are the specific levels I'd be looking for in advance beforehand. So they're not like, oh, here, this is a good level that was already hit in the past. This was all done publicly through my Twitter at I_am_ICT. So you're welcome to go and look at that. The tweets are still there. You can see it's all there for public consumption. Now going back out on a higher time frame, we can see how that level at 16,450 acted as a nice resistance price point. And now I'm going to bring in what I refer to as a ICT market maker sell model. Now at first glance, this is going to look like, if you've been really studying technical analysis for a long time, it's going to look like Wyckoff. Okay, and admittedly, there is a lot of similarities to Wyckoff's markup and markdown. That's not everything that's going on in here. I just saw that years and years and years ago, and it helped me see something I thought I was imagining. I would see a lot of this type of formations and price action, but I do not subscribe to Wyckoff. But I encourage anyone that watches my material, if you haven't looked at Wyckoff, study it, and then you'll see the folks that just look at me drawing these boxes on here. They think right away that it's Wyckoff, and don't even waste your time learning anything from ICT. I have amplified a lot of things that retail-minded traders and educators have put out and regurgitated off of each other, and all I'm asking you to do is take a look at it. Okay, it's free. It doesn't cost you anything but your time, and I promise you, everything that I talk about, if it's resembling anything in other disciplines, it's not. It's not what it is, and I amplify or correct the shortcomings of other disciplinary approaches to trading. And Wyckoff was no exception there. I built a lot of precision around the general theme. Okay, so I guess what I'm saying here is don't focus so much on these boxes and miss the entire point of what I'm trying to show. But I do cover this in my tutorials. So what I'm looking at is we had this original base of accumulation. Okay, so where markets were about to rally up. Okay, all my eye does is go right to this area of a trading range. Now, you can frame all kinds of other trading ranges out of all this stuff here. So why am I using this one particularly? Because it had the most dynamic price action movement away on the north side of it. So this whole range here, I classify that as the original consolidation or accumulation phase. So longs were being accumulated here. Price moves out, then goes into another consolidation. Then we have another expansion out of that consolidation. So there's a reaccumulation. So in the scope of the entire process, it's smart money accumulation of long positions. It moves higher, reaccumulates more long positions, goes higher, reaccumulates more long positions here, and then distribution right here. And then they start selling off their positions here, and at a later time they'll start selling off here, ultimately to get back down below here. Now there's two types of market making. Okay, there's market making that facilitates the trade between other traders, and there's in-house market making that will also provide a means for the market maker to make a book for themselves, to making a profit. So they can also speculate, not just facilitate trade or pair up orders between buyers and sellers. In this instance, okay, the buyers that bought in here, they could have sold here and had nothing left on the position. The buyers that bought in here could have sold out here and had nothing left in their position. Same thing here, they could have bought here, sold here, and had nothing left in their position. There are some that hedge, so they could be selling in here, selling more here, selling more here, and then selling more here, and as it starts to come back down, they'll start buying it back, they'll start buying it back, and they'll start buying it back down here. So they're always in the market doing something because they're being counterparty to other traders. So there's market making in that respect. So they're really not trying to make a profit, so to speak. They're just being counterparties. Okay, and that's the smallest scale, or I guess the opportunity that market making seeks. Okay, that part of it, market making is not trying to facilitate trade for no profit, but it does occur and it does appear in trading. What I try to promote and teach in my studies is during these original consolidations in here, this is all smart money buying. So if we start to see a consolidation in here, I know that it's going to be reaching for a specific level. So I can start going through the higher time frame charts to figure out what they're reaching for, because they're not trading on 30-minute and 5-minute and 1-minute charts or tick charts. It's based on a higher time frame level. And again, before we close the video, I'll show you what this level is and why it was so important. But when we start seeing these rallies up and consolidations rally up, I know I'm in what I refer to as a ICT market maker sell model. In other words, they're ramping up or pumping to dump it. So everything that they bought here, anything below that would be form of a sell stop. So traders that bought here, held, didn't trade a stop loss higher, held and didn't bring their stop loss up any higher, held and didn't bring their stop loss any higher, then didn't do any readjustment for their risk management either, so their stop's still below here. In here, there's going to be another sell-off likely, and they're going to target that level right in here. So that's basically what it is. It's a pump, reversal, and slam it down to take out the long holders that were here that were not smart enough or astute enough to get out here, here, or ultimately here. Okay, so that's what makes the sell model, or basically a pump and dump in the grand scheme of things to keep things pretty retail so you guys can understand what I'm saying. That's all it is. It's just a run up, just a sell off. So if we look further, we can see that the price eventually did hit the second level I had for a price objective. And I try to screen capture it as the markets trade to the levels I call for in Twitter. And this is where I would personally be taking some partial profits here if I were selling from up here or up here. And you can see back on that higher time frame, we can see that price has now moved below this consolidation and ultimately has retraded back down to the top of that consolidation right here. So you can see how price did go a little bit below that second level objective. Didn't quite get down to the other objective I had in mind, but we're seeing a little bit of retracement. I mentioned this during the particular trading day on the 27th of December. It was actually coming in around noon, New York time, and that's exactly when the opposite end of the daily range should form. So this whole entire day has been down, so the low should be forming between 10 o'clock in the morning and noon, New York time. Okay, so whatever time it is in New York, it's important to know that. And there's the low. I got asked by a follower on Twitter, what did I think was going to happen? Was it going to go any lower that particular day? And my opinion was that we've already put in the bulk of the volume. So banks, if they are in fact trading these, their volume is done. Okay, so the range should be capped at this point, and we see that was the fact here. And ultimately, moving forward into the 28th, which is the time of this recording of December 2017, this is the whole entire market maker model to completion. Okay, I took a picture with the screen capture feature, and you can see the original consolidation, the stops that would be below here. That's what was targeted right there. And you can see the smart money accumulation, reaccumulation, reaccumulation, smart money reversal, low risk sell, redistribution, ultimately taking us back down below the original consolidation. So the entire cycle is complete. Now, that doesn't mean that this is done. It doesn't mean it's not going to go any lower. In fact, I think it's going to go to this level down here. Personally, if a gun is held to my head, that's what I would expect. But we'll have to see what's going to actually happen. But I've been putting these things out in public so you can see what I'm anticipating, what I'm seeing. So that way it's not like I'm looking back and saying, oh yeah, this was something cool, but it's already happened and there was no real element to drawing your attention to it beforehand. All right, so I'm looking at the Bitcoin versus the US dollar is the daily chart. And again, this is Coinbase. And I want to kind of like draw your attention into here, okay? And where we are at right now and what we're doing in terms of price action is the reason why I felt that it was more appropriate to anticipate a sell-off at 16,450 or very close to that level. And I'll show you what that level is and why it's important. But before that, I want to draw your attention to this high back here. Let's zoom in a little bit. Okay, so on this particular candle right here, if you look at the open, high, low, and close up here, on this candle here, the high comes in at 19,697. This candle here, its high comes in at 19,797. Then the very next candle here, this is the candle I said that we would not see 20,000 and it was going to reverse and slide 2,000 to 2,500 points, and they would refuse those individuals that were holding out for 20,000 on Bitcoin. The high comes in at 19,891. If you go on Twitter on December 17th, 2017, on my Twitter feed, you'll see me actually outlining why this is the case and why I felt it was most likely going to be a market maker trap. The reason why it was going to be a trap is because we had already priced above the all-time high back here, trading right into it, just above it a little bit, and I like to see that as false breakouts. Okay, everybody on Twitter and the ones that you're probably listening to now, they were all excited about Bitcoin breaking out. It's going to keep going higher. Here comes 30,000. And once we get through 20,000, it's going to just be a straight shot to 30,000 and so on. They were talking about Bitcoin 150,000. Everyone was talking about Bitcoin. My wife herself even mentioned to me, hey, are you trading Bitcoin? Because it's really going up a lot. Well, if my wife is sitting next to me on the couch and she's asking me about Bitcoin, and if I'm not in it, or if I should be in it rather, um, it's time to get out. Okay, and I love my wife, but she's not a trader, so that means everybody knows about Bitcoin. And I shared a couple of stories on my Twitter feed. I was in a grocery store, and a guy behind me, two carts back, literally told his son, or I'm assuming it was his son, put the ice cream and the cookies and stuff back on the shelf because he was trying to save some money because he was going to buy more Bitcoin. I even said at the time, I was like, this is incredible. Everyone's talking about Bitcoin. So if that's occurring while it's up here, it's done. And between that and the fact that we broke out to an old high, and we're looking at that big benchmark at 20,000, it's just like dangling a carrot between, before them. They're gonna, oh, it's gonna go higher. It's gonna keep going higher, and that was the real reasons why I called the top in Bitcoin that particular. So ultimately, I did see my 2,000 and 2,500 point slide, but in the process, it ended up changing the entire market structure. So it ended up becoming over 9,000 points in terms of a slide. Now, they're going to say this is a correction, but I see that as a crash. And I was talking about Bitcoin crashing before this run up here. Okay. I felt that it was going to crash. I felt it was going to go lower. I did not want to see it trade to 20,000 on this day or this day based on all the elements that were there. I mean, the public, the street money was talking about Bitcoin, and we're staring right at a 20,000 benchmark. It never got there. Okay, and it traded aggressively lower. And then all through this, right around in here, you started seeing all these stories about, you know, Bitcoin founders of this exchange or that or whatever, supposedly well-known individuals, pillars, if you will, of the cryptocurrency realm, were saying they've all exited and sold all their cryptocurrencies, and it's useless, it's this and it's that. So we were ahead of the curve in that regard. So again, I'm not trying to beat my chest and say I'm Mr. Crypto, because I'm not. I'm just saying that the things I know about price action, I just started applying it to this. Okay, it's not like I have some secret recipe for crypto trading because it's price. It's the same thing. So if it's trading and people are making money or losing money in it, the banks are involved. Whether you like it or not, they are. And I know this for a fact now because I can see how their algorithmic approach to reading and working in price is in price action. If they were not in the banks, my methods would not be holding up like they are. And I trade with an institutional perspective. I don't see, retail things. There's nothing indicator based on my charts. None of that stuff appears on my charts unless I'm drawing a specific contrast to how retail would see something versus how I look at it from a price action standpoint. I'm only concerned really about these four indicators up here: the open, the high, the low, and the close. Those four indicators to me is everything you'll ever need. Because if you understand what the open, high, low, and close is on one currency, if you have a barometer, for instance, like the dollar index, if you know the open, high, low, and close of that, and contrast what you're trading against that, you'll have all the indicators you need in terms of relative strength. So if I know that the backstory is this high's been violated and then we rejected, we came down here and now we're consolidating, what is most likely going to occur? It's probably going to go lower. So if it's going to go lower, what's it going to do first? Run the buy stops. That's this high right here. Okay, so this high comes in at 16,261. Okay, 16,261. Right before this high was broken by this run here, my eye goes right to the down close candle right before that run up. This is what I teach as an ICT breaker. This is a bearish breaker. So if price trades to this low at 15,700, that begins the distribution cycle of anything that was used to go long here to knock out the original short holders that had protective buy stops here. They started seeing some money here. They ran it up there one more time, boom, knocked those individuals out and started to collapse. At this moment right there, this candle and any long holders are underwater. So they're going to want to mitigate that. In other words, get out of that position. So the market will be repriced to that level right back in here. You see it. And they'll distribute there. But also notice it's happening as this swing high has been violated as well, because any short holders here, they're going to have their stop loss trailed right above this. And they take the market right above that level here. plink, there it is, and then they quickly reprice it. Now we're going to go into a monthly chart, well, not a monthly chart, but a monthly perspective, and we're going to zoom in a little bit. And this is a 30-minute chart, okay? And you can see, let me go one more time to make it a little bit more clear. And more. So you can see this high back here. We ran right above that, and then the distribution cycle, okay? Above this high, buy stops, and then right in here, I want you to take a look at this candle right there. This is the secret sauce, okay? I'm going to zoom in one more time so you can see it. This candle right here, okay? This is the last up close candle right before this big move down. So this candle, its high is 16,654. Its low is 16,300. Okay, so approximately in the middle. Okay, we're going to get close to around 16,500, and I want to get out a little bit before that. So 16,450 is what I elected to go with. So what this is an ICT bearish order block. Okay, and it's just above where the buy stops would be, and price rallied right back up to that price point. Rejection, down she goes. Okay, we are originally seeing that buildup of long positions right in here. They rallied up, reaccumulation, reaccumulation, reversal, hit the brakes. They only pumped it up here to knock out the stops here. Then and only then will price be allowed to trade lower, and that's what we saw here. Okay, and then we had an optimal trade entry sell here and target the lows under here, which is what we've seen here. And now we have another consolidation. Notice also, just like this area where the short-term high has been violated with this run here, sell stops have been trailed on the shorts right above this high. They've been knocked out, and then only then it quickly was allowed to move moving lower. Again, in here, we have a swing high. It will be resting above that on shorts, protected by stops. Boom, they knocked those individuals out, and now, and only now, is it permitted to trade lower. Okay, so we can start looking for objectives lower than we've already seen. You can see the elements, everything I just outlined here, everything as it was shared on Twitter. And ultimately, I think if we get below 13,000, we could trade to 12,920. But ultimately, a lot of liquidity is resting right below this fractal. So I would be expecting that to occur. We could see 12,800, something like that. If we get any momentum below 12,800, we're going below 10,000. And if that occurs, we're going to be looking for 8,300. And if it goes below that, it will be 5,000 to 6,000. And anything less than that would be just Armageddon. So that's what I'd be expecting. Now, what changes this whole scenario? It would need to trade back above the midpoint of this consolidation, or trade basically back above 15,100. Okay, so anything less than 15,100, we're bearish on Bitcoin. Okay, so I kind of wanted to use this as a segue into welcoming the new crypto community that's building in my reader base. So I don't promise to give you a whole lot of crypto-based ideas, but I have seen enough to know this. Everything that I teach that is salient to Forex is working in crypto. The ICT kill zones, the London, New York, London close, Asia, all those things are still working as they would be expected in crypto. A lot of my higher learning things also are working as well that would be taught in my mentorship. So if you have a lot of time and you go through all my tutorials that you can be found on my website, theinstructrader.com, again, the forum is free. You can join. It costs you nothing. It's a community that we're building. My only request is be respectful, because if anyone is unruly in there or starts to troll and they report that to me, I will disable your ISP, so that way you won't be a member of the forum anymore. You're welcome to discuss and encourage each other with opportunities you may be seeking using my concepts. I am really on the sidelines, even though it seems like I'm always doing something on Twitter. I'm away from the markets generally until like the third week of January of every year. I usually take the week before Thanksgiving off until the third week of January. And it's probably going to be closer to February before I actually do anything this year, because I spent the last 15 months with a group of traders in my first mentorship class. So it took a lot of steam out of me. So I will be opening that mentorship up again in January 2018. So if you want to go through the higher level learning stuff and be a part of a ongoing education group, it's $150 payable to me by way of PayPal. And that link and all that information will be shared tomorrow for those individuals that were signed up on the mailing list. And if you can't do it right now and it's closer to February for you, then that's fine because it's open enrollment every single month. There's no closing, there's no end. Okay, so when you subscribe to it, you pay 12 months at $150 and you get 12 specific modules that goes through all of my core content. But that is not the mentorship. The mentorship is an ongoing learning experience, and I have 25 years of experience of looking at price, studying price, knowing certain things and subtle nuances that my free tutorials will not ever have in them. So it's kind of like a private community. Okay, while we have a community that's in my free forum, the mentorship group is things that I'll teach that I'm never going to make public, not on YouTube, not in Twitter, none of that stuff. And I haven't taught everything yet. So there's so much information, I just can't do it in 12 months. So if that interests you, you're certainly welcome to do that. After you pay 12 months, you never pay any more ever again. The total cost is $1,800 US dollars, payable in 12 installment payments. If you do quit, you are not permitted to rejoin. So if you're going to consider doing it, make the commitment to do the entire thing, and understand there's no refunds. There's uh, an NDA. You can't teach the material. You can't tweet about the things that's taught in the mentorship because it would remove you from the group. I have removed individuals from it already, and they have paid me, but they also understood and signed the terms of use, and those agreements are long-standing. They don't end. So as long as I'm operating as a mentorship, those terms of use will be there, and I don't plan on going out of business anytime soon or stopping. So um, it's up to you to decide what you want to do. But I just felt that it was an interesting study on my personal um, time using my concepts and crypto. We've had a lot of positive feedback with the tools and concepts. So I can see why everyone is excited about using what I teach in Forex and futures and stocks and all that. Index trading, all those things have elements that repeat themselves over and over again. But everything that I teach with Forex, everything that I've done thus far and made public either by way of free tutorials and even in my mentorship, the content that's been delivered so far in that group, everything works in crypto. So to me, these markets are being made by banks. Okay, I know that the crypto community is like, you guys are like insanely faithful and committed to the cause, and you don't want anything said negative about it. And I'm not saying anything negative except for the fact that when it was 18,000, anybody buying up there was stupid. Okay, and you can see the cause and effect of all that stuff now. All I was relying on is the simple fact of understanding the markets, understanding human psychology, and the fact that everybody is a buyer and it has to reset. It has to go back lower. Why? Because it's designed to do that. It's designed for people not to make money. You think this is here, this is all for your benefit. It's actually not. It's not. It's a casino just like anything else. Wall Street's a casino. The Forex market's a casino. And it's fine. It's okay for you to admit that it's rigged, because when you understand how it's rigged, you have a advantage. You have a greater understanding of what they're doing, so that way you're not led to slaughter. Okay, you understand what they're doing with the masses, and you can stay outside the herd. Okay, the herd is what gets fleeced. The herd is what gets sent to the slaughter. That rogue, okay, animal that stays outside the herd, okay, generally they're the predators. And that's what you can become. You can be a predator, looking at price action and picking your spots, being a part of moves, and then moving to the sideline. I am not a proponent of hold on for dear life. I think that, if these markets are going to be moving around, they should be traded. Okay, how many times are you going to sit through, 9,000 plus point slide? Especially the individuals that were buying it like 15,000 and above. You watched it go up, and now you're underwater. So To me, that's not trading. That's gambling and hoping and praying, and I don't like to do that. So hopefully I've been, at least to some degree, encouraging to the crypto community, letting them know that you guys finally convinced me to look at it. Now I'm looking at it and I see some positive things. So are we without going lower from here? I think it's healthier for Bitcoin to drop. I think if it's going to go higher longer term, it needs to wash out. Every one of you hold on for dear lifers, okay? Because if you sell it, that provides their liquidity to buy it, and the banks are really, really interested in these things. So think about it like in 2000 when the stock market crashed. Okay, we went lower. Well, everyone was, it's the end of the world. But look at it now. So we may be seeing the very same things occurring, just 10 and 20 years away, where people can look back and say, wow, we were doing things that were entirely brand new and we got in real low. And even though this is kind of inflated in terms of the pricing, if it goes below 10,000, I think that, if you have a means to do so, I might entertain the idea of putting something on for a longer term and start, building in positions down there. And as it goes higher, you know, do some of that stuff with the expectation of 10 to 20 years out, but not like, um, you know, buying on the highs like a lot of folks have been doing because they tell their brother, their cousin, someone's talked about something, they shared a video or whatever. If it's been running up, I don't like to do that. I like to be buying it when it's dropping and has been dropping for a while. I I want to buy when it's going down and I want to sell as it's going higher. That's just the way banks trade. Okay, so if the banks have to do that same measure of entering and exiting, scaling in and scaling out, that's the mode of operation I'm going to work with as well. And crypto's proven to me that it's no exception in that regard. So very encouraging, very, very encouraging. Do I regret anything? No, because I didn't trust the asset class. And it wasn't until I had a family member actually get into it, which is my nephew. Um, Jay, if you're watching, hello. the uh, the movements that he was showing me, even though he doesn't have any idea what he's doing, he just went in there and just bought it based on his. I guess he bought into the hype. Everyone else was doing it too. And fortunately enough, he was in at a time where it allowed him to make money. So he's still in a position of profit. But I personally have been, preaching to him, take your profit, take your profit, take your profit, and look for a better opportunity to buy in and get a, core base of liquidity to work off of with a lower price, not with what you got. So he hasn't listened so far, and he may never listen to me. But ultimately, between that and the community that I've been a part of and have been building for a number of years online, they have finally got my attention in terms of crypto. So there's another kid on the block in the crypto community, and his name's ICT. If you enjoyed this presentation, you can find more at theinnercircletrader.com.